Hi, everyone. Today we have Megan Van Wettering with us from U.S. Bank. She's a mortgage loan officer. We're so happy to have you here today.
Thank you.
And she's going to be answering some questions. Maybe you guys have those doubts, and today she's going to be answering this for us. But first of all, can you tell us a little bit of your background, like what got you into being a lender?
Yeah, so I've been in banking for 20 years now. I started when I was 19, 20 years old. I started off at a community bank in Lamars, Iowa. It was right before the first housing crash, and I had just graduated college, was just going to be a teller, and then things got kind of hectic and moved quickly, and they needed help with the real estate department. So I became a lender right before that big refinance boom, the initial one back in the early 2000s, mid 2000s. So I've been doing lending ever since then. And I've been through the whole spiel of like the easy GFEs and the HUDs where we can kind of have numbers right to now we have to have closing disclosures and loan estimates and timing requirements. So I've been in lending for quite a while. I did take a break for about a year, but so I went from a community bank in Lamars, took a year off, and then now I'm at U.S. Bank, and I've been here for 4 years.
So you started when it was, like changing.
Oh,
when
it was big changes. Yep. So I've known all areas of the housing lending where we could call up the appraiser and talk to him, and now I don't even know who the appraiser is until I get the report.
Everything has changed.
Everything has changed.
Because you were mentioning back then you didn't even need a closing disclosure.
Well, we had something called a HUD, and on the HUD, it would give you numbers, but the numbers could kind of be right. And if they weren't, we would just rebalance after and refund the borrower if there's anything extra. Yeah, but now everything's to the penny and exactly right.
Because, when I go to the closing, there's a closing disclosure, and then there's something similar, but by the title company.
Yes, their settlement statement.
So everyone balance out the numbers to make sure that they're correct?
Yes. Yep, and back then, we kind of did too, but it wasn't nearly the extent, and we didn't have to have it out within so many business days before. It's very easy.
Oh, yeah, because now it's easy. 3 business days,
yes.
Right?
Yep, all these timing requirements.
So whenever a closing is delayed, because I know I've had that question before, because when you're under contract, time is of the essence with paperwork, anything, statements, whatever it is that's required. And then by just a day that you're delayed, it could also delay that process of the closing disclosure.
Yep, absolutely. Sometimes closing disclosures don't get out for whatever reason. Maybe we're waiting on numbers, something hasn't come in yet. And sometimes, if we don't have it out, we legally cannot close until the customer has 3 business days to look it over.
Dang.
Yeah.
Yep. So that's the end of the whole process.
Right. So that's we're done, right? Yeah. We just skipped right to the end. Yes, but that's at the end of the process.
Yeah, but still, it's good information. So that's the very ending. But let's go back to the beginning. When somebody contacts you, I'm sure the main question everybody always has is hey, what do I need?
Right. Exactly. So some things to get ready when you go in to talk to a loan officer. You need to have financial documents. That includes pay stubs, W-2s, bank statements, 2 months of those, sometimes tax returns. So that's where you start, have all the information gathered.
And it's really easy to have everything in line, right? All the documents prepared, ready to go.
Exactly. And sometimes, even with our application online, you can even hook up your bank account to the application, so you don't even need to bring in bank statements.
That's
if you have online banking.
The internet is making everything easier for us.
It is. And sometimes I don't even need pay stubs and W-2s if your employer is affiliated with the work number, because that just will pull in automatically as well.
So with...
But it's still good to have those things ready just in case.
Yeah, you never know.
Right.
So with online applications now being a thing, I have some clients sometimes that they have a really busy work schedule.
Yes.
That their only day off is Sunday. And they're hey, can I go to the bank on Sunday? I'm no, banks are closed on Sundays. You can't.
Right.
But online is very easy, right?
It's online. And for me, I have my computer with me at all times. So if it's a Thursday night or a Sunday morning, I'm available to still look at that application get you pre-approved if you need it.
Which is important just in case someone has a house that they love. It went on the market and then let's go.
Right. You don't want to wait for Monday and maybe they're done taking offers by the time you get your approval.
And which is why I always tell everyone, even if you're like a year out, find out what it is that you need. That way, have a process.
Exactly.
Instead of rushing to a house that just came on the market that weekend.
Right.
Or 3 months out.
Absolutely. It's
how long do pre-qual letters last for?
Ours last 4 months, and after 4 months, it's not that it's expired or you're no longer approved. We would just need to revalidate all the information we had. So it would be a new credit pull. We might need to look at income documents again.
And there's a few kind of loans, right?
Yes, there's a ton of loans out there, lots of products. Conventional, that's everyone's favorite. It's your fixed rate financing for 30, 20, 15 years. They come with a variety of down payment options, and that's really the thing. And then there's like FHA, USDA, adjustable rate mortgages, and like banks like us, we have specialty products like American Dream. So there's an abundance of products out there.
And how do you help them determine which one is right for them?
So no two borrowers are ever the same. I call it a puzzle piece. It's kind of cheesy and corny, but you build their puzzle differently. It depends on what your down payment is. It depends, do you want down payment assistance? Can you qualify for it? What's your credit score? What's your debt to income ratio? Did you serve? Is a VA loan a good option for you? It's just every little piece is different. And you just have to sit down and go over all of these pieces with your loan officer, and they can help you determine how to build your home loan, because you can do a lot of different things.
That's another reason why I always advise them to be open, have trust with us, because the more we know, we can help them the best.
100%. Yes.
Yeah, because sometimes little things pop up and I'm like, if I would have known, I could have helped you.
Right. And so that's one of the things. I've had a couple customers in the past couple years, and we get to underwriting, and all of a sudden the underwriter is finding things, or title work is done and they're finding things. So if you're doing an application, please just be as forthcoming and transparent as possible, because these things will come out eventually. You can't hide it. You can't hide it. So just let us know up front, and then that way we can work through it if need be ahead of time, versus potentially everyone scrambling, having a headache, we can't get to close.
Yeah, because everything can be solved, whether maybe it might not be right now as one would wish, but it could be in 6 months or a year.
Exactly.
And I mean, the time goes by anyway.
Right. I mean, I have people sitting on pre-approvals from 6-7 months ago. So I mean, might as well just get in front of it, take care of it. And that's the other thing too. If you do have questions like credit score, right? There's all different credit scores out there. Get in front of these things. Know what's on your credit report, talk to a loan officer, figure out what's a problem, what's not a problem. Collection items. This is kind of controversial. Some loan officers tell their clients not to pay them off right away. I'm in the kind of mindset, some of these loans, if it's an FHA, we can't even get you approved if you have too many collection items out there, or it's too high of a dollar amount. So just know what's on your credit report. Check out on those collection items. Just get in front of it. And balances, credit card balances, that can bring your credit score down too. Or if you need to do the Experian Boost just to get your score up a little bit, just talk to your loan officer about it.
And that's so funny that we're talking about credit scores right now, because I know we worked on one last year that they didn't have a credit score.
Yeah.
Zero, nothing at all.
Right, yeah.
All cash.
That was the tornado one.
Oh, yeah.
Yeah. Yep. Getting locked in that vault while taking an application. That was a first, but we did it, and you helped find a solution. So it was great.
You got your laptop and we're working in the vault.
Yes.
I remember looking out the window. It was scary.
I know, the sirens were going, and then they have their babies, and it's okay, well, they're okay.
Yeah,
we're okay.
And they're okay, we're locking the doors and everything. We were stuck in there. But we were working.
I know. And that's the thing. It's great to have someone like you as a loan officer who's I was hey, she doesn't have a credit score. And you're I know someone who does that we can add. So then that was great. We got that figured out.
Because you want to know how I met them? They were looking for a house, any house, and they wanted to do a contract sale, which there's nothing wrong with that. But I just weighed in like the pros and cons,
Right.
with like going to a lender and doing things that way. And like with them, the only thing that was, so I asked them like, so what's in the way? They're like, well, the credit score. No problem. I know somebody.
Right, exactly. And not having a credit score isn't you can't get the loan. It's just maybe we need to find a co-signer. And a lot of times you need more down payment if you don't have a credit score. But let's have a conversation. Let's see if we can find a solution.
Yeah. And
if anything else, if it is 6 months out, we can build you a credit score.
oh, that's right. Yeah.
I mean, we just need 6 months of active activity on a card, and then you have a credit score that's eligible for a mortgage loan.
Does U.S. Bank offer the secured credit card?
Yeah, they have.
Yeah, there you go.
And it doesn't even need to be U.S. Bank, even though it's a good product, but any credit card would be fine.
Card. Yeah, as long as they pay.
Yes, yeah, make your payments, make it a good score. But yes.
And then I've had friends, sometimes they take out a car loan. Oh. And then we go to the bank and they're like, oh yeah, my payment is like over $1,000.
Oh my gosh.
So that kind of messes with the debt to ratio.
Right.
Is there any advice that you would give to someone that, like wants to buy a car? Should they wait?
It depends. I mean, I don't know everyone's financial situation. Maybe they really need a car, but if you're also looking actively for buying a home, I would suggest do one or the other. Mm-hmm. If you can wait to buy the car, if you're actively looking for a home, please wait. Mm-hmm. It's just going to really, like you just talked about, debt to income. That's a big piece of the puzzle, right? Like we have to piece this puzzle together. So we've got that debt to income that we have to look at, and a lot of times 45%, sometimes 50% if you're really good in other areas. But I would just be cautious of that. You can always buy the car loan after, or get
and
the car
another
loan after.
thing, talking about like debt to income ratio, that's really important to determine like what they can afford.
Right.
Sometimes they ask me, oh, but what if I have my cousin living with me, or like a family member living with me and they're paying too? Can we add that to the loan?
No. Nope. Unless they're on the loan, we can't consider their income. And even if they're going to pay you rent, even if they're going to pay rent, we can't consider that.
Okay. Yeah. It's doing things by the book.
Exactly.
And then, so you mentioned that there were programs for like first-time home buyers. Sometimes there are buyers that do need that. Can you talk to us a little bit about the programs that U.S. Bank offers?
Yeah. Yep. So first-time home buyers, we have specific programs directly with U.S. Bank, and it's not even necessarily just a first-time home buyer, but a lot of first-time home buyers need assistance. Let's face it, things are really expensive. It's hard to save money. So to have a large down payment is a struggle. So a lot of times the first-time home buyers, we can hook them up with lesser down payments, and that's a big deal. We can go through Iowa Finance Authority, different grant options, and get them down payment assistance that way. Sometimes a little better rate if they can qualify for like a Freddie Mac or Fannie Mae. They're low down payment options. The big caveat for a lot of those is you can't make too much money. There's income limits on how much you can make. So that kind of holds some people back, which is why I'm super excited about a new product from Freddie Mac where you can get a 3% down payment, but you have to be a first-time home buyer. But it doesn't come with any of those income restrictions, which can be a really big deal because, again, it's hard to save money, but yet you make good money. So it's nice to have that option available. And then you can still couple it with like some of the, if you don't make, there's still not like another little pocket of window of like income restrictions for like the Iowa Finance Authority down payment assistance. So we can still get you that potentially with a conventional loan, which is going to make it even better when you go to buy a home. Because as a first-time home buyer, FHA is great, but they can be overwhelming because there's a lot of questions. So
a lot of questions.
And then the appraisal can get a little interesting.
Which is scary. I do understand because like when I try to explain FHA and they're like, wait, but what's the difference between FHA and conventional? I'm like, well, I try to explain as like simple as possible.
I know.
And then I'm like, well, there can't be chip paint. Oh, but we don't want chip paint anyways.
Right, so, exactly.
Yeah,
but I mean, it might sound fine, but like if we're looking at this rain and the snow we're about to get and you're getting an FHA loan, now you're looking at escrowing for getting those repairs done. And that can be kind of a hassle because it means even more out of pocket because we have to set it aside and it's like 1.5 times. It's fine. And that's what dealing with someone like you, an expert like you, and just someone who understands the process to help them through. Because if you can get a conventional for 3% down, if you qualify for it, or if you can go FHA 3.5%, like I would much rather go the 3% conventional.
Yeah.
And if they need even more help, that's where they can turn to you like, okay, I need help with closing costs. So can we negotiate that? Or I need help with the broker fee. Can you help with that? And that's where it comes hand in hand working with someone.
Yes, definitely. And what can you tell, or like what advice can you give to those first-time home buyers that they listen to this and they're like, okay, that kind of freaks me out a little bit right now. Like, sometimes that holds them back. Like,
right. It's scary. I mean, looking at 30-year mortgage, that's a long time. And you're going to be in this house for a long time. But that's just why it's important that you just sit down and you can just have this conversation. You can talk to you can talk to me, ask any and all questions. And that's only because the nervousness comes from not understanding. And the only way to understand is to ask questions. So once you kind of walk through the process, it's not so bad. It's just one step at a time to get through it.
That's a really good way to look at it.
Yeah.
Yeah, because I'm like, hey, no matter what, you're going to have to pay.
I know. You're either going to pay someone and get equity or you're going to pay someone and get nothing.
Yeah. And I mean, there's like so many pros with owning a home.
100%.
Yes. Like, I mean, come on, like houses have gotten so much more expensive.
I know.
And like, I know that there's people that bought a house years ago and the mortgage payment is pretty much the same. So when the world has gone up like this, like getting more expensive,
steady.
like they're still steady. They're still
Exactly.
good. They don't have to worry other than like their mortgage payment, then that's it.
Yes. Yep. There's something to be said about that stability, knowing where your rent is going to be or your house payment. Because as things come up, inflation comes up, rent's going to come up. But your house payment, if you get that fixed rate, it's going to stay the same.
And I know that there's a lot of people that don't want to sell their home because of that. And they want to buy another house. So does that work different than when they're buying their first home? Like, let's say they want to keep that house, they want to buy a new one.
Right.
Can they have like 2 loans going on at the same time?
As long as your income can support it, that's going to be the biggest thing is you need to have some down payment if you don't want to sell your house. And hopefully you have some money saved up for down payment. And then 2, what does your income look like? And that goes back to that debt to income we talked about before. Can we get both house payments in there? Because we won't be able to use any potential rental income because they don't have it rented yet.
Oh, gotcha. Okay. Yeah,
if they're going to keep it to rent, let's say.
Yeah, which is like what I usually hear that
Yes.
they want to do. They're like, hey, I got a good interest rate on the house. I'm not letting it go.
Exactly. And it's a great asset. Those low interest rates are really good assets. So I don't blame them. But again, just comes down, can your income handle it?
Yeah. And like, what if someone has like a lower credit score? What is something that they can do to like kind of get that step ahead towards buying a home?
So you can go online to Experian, Equifax, Credit Karma, all these sites, and it literally gives you a breakdown of every single item on your credit report. The big things that bring your score down are judgments, collections, and of course you can't buy a house if you have open judgments anyway, so you're going to want to take care of those. Credit cards, it doesn't seem like a big deal, but if you have like a $500 balance on your like max balance and you're pushing like 501, 502, that's going to really bring your score down. So just make sure you're keeping your balance down.
A lot of inquiries hurt the credit, right?
Hard inquiries. So like if you're car shopping, that's another reason to wait, because a lot of these car dealerships will go and pull your credit, like hard credit pulls. Like I've seen some people with 10 credit pulls from one company, and it's insane because that just pulls your score down.
It's like, they really want to sell.
They did. They really wanted to sell it, but now you can't buy a house. I'm sorry. So that's another big thing. And then just making your payments on time. Even one late payment, it's pretty crazy how quickly that can turn your score upside down.
Oh, yeah. We've actually seen that quite a bit, or sometimes, right? Yeah. And then also like when they go to the store and then they offer like a credit card, I've seen that hurt the credit score too.
Yes.
That is like sometimes by like 1 point.
Well, and like a lot of these down payment assistance, you need a minimum credit score, like 640. And if you have a 639, it's a pass. It's a hard pass. Like it doesn't matter if you're so close.
Yeah. And I've seen where it's like it's because of an inquiry.
Right.
Because in the report, you can see like how it was.
Yes.
Okay. So when I've gone, because sometimes I go translate, you know, like, so you tell me and then I tell them like what's going on.
So you hear all of it.
So I hear all of it, and I have seen kind of how it works, that there's 3 credit scores.
Yes, there's Equifax, Experian, TransUnion, and what we do is we use a middle score. So let's say you have a 700, a 690, and a 680. 690 would be the score that we use for your loan.
Oh, even if the other one is 640?
Yes, it doesn't matter if it's like a 640, a 720, a 690, it's still 690.
So take care of your credit, guys.
Yes.
And, you know, like, it's tempting. Sometimes when they offer those discounts, they're like, hey, you'll save $50 right now.
Right. It's not worth it in the long run, potentially.
Especially if you're looking to like buy a home or anything else, you know, because everything's cheaper when you have a good credit score.
Yes. Yep, 100%. The other thing, we're kind of talking about different things when applying for a home loan. We've talked about, you know, maybe wait to buy that car, be careful with your credit score. Don't quit your job. Don't change jobs. Try to keep steady employment, especially right before buying a home.
That's a great topic. I'm so glad that you said that because
I've had this happen a few times in just the past 2 years where we go and do the verification of employment right before we close and they're no longer employed. And it's like, we can't do your loan. I'm so sorry.
Yeah, you need to show a steady income.
Yes. Yep.
And then, or I've also seen when they like switch from one job 1 year, then switch to another job another year, and switch to another job another year.
That can throw up some red flags too. I mean, that situation's probably fine, but if you've had like 4 or 5 jobs in the past 2 years, it's probably going to be hard to prove your income.
And it's like requirements, you know.
FHA especially will ding you on that one. Yes.
Definitely. And then what are other things that people should not do, like quitting their job?
I mean, that's the big one. Large cash deposits, that often throws up red flags, especially, again, if you're dealing with an FHA type of loan. So if you have any big deposits you need to make sure you're documenting and you can source it. Because what we need to do is make sure that you don't have a loan that you deposited for. So, because if that's the case, it can mess with your debt to income. So we're looking at all these things. That's another kind of big thing.
How about somebody that is sending money to their relative somewhere and it's like a big amount? Does that throw up red flags?
As long as that person's willing to sign, like if it's like a big chunk and they're needing it for down payment, we can grab a gift letter if the other person is willing to say, yeah, I'm not expecting anything to be repaid back. This is just for them. Then we can maybe approach it that way.
Oh, so like right now that you mentioned gift letters, because sometimes, you know, family wants to help.
Yeah, absolutely.
They're like...
It does need to be a family member.
Oh, okay. So like a direct family member?
Yep, like cousins or uncles, aunts, moms, dad, grandparents.
Yeah, because I have seen that even like cousins say...
Siblings,
hey,
yeah.
Here's some money, you know, I want to help you. I want to be there for you.
Yep, siblings, work, cousins. Yep, as long as you're a family member, they can gift money, and that's not a problem.
I'm trying to think of anything else that would be like a no to that. Like, for example, if they're using their own money for like a down payment, it can't be in cash.
No, we don't collect cash. We cannot accept cash. We don't accept credit cards at the closing table. So you need to have it in your bank account. We need to be able to source it and document it.
How long prior to like purchasing a home should they have it in their bank account? Because I've heard sometimes they don't like to, I don't know, they like keeping the cash. And, you know, and I come and I talk to them, I'm like, hey, I really think you should start depositing that money into an account, because
I would say at least 3 months before you go to apply.
Okay.
Because we're going to look at 2 months of bank statements minimum. So if that money's already in there by the time we look at that bank statement from 2 months ago, we don't have too many questions if the money's already sitting in there.
Okay. Oh, that's good to know then, because I've heard some stories.
Yeah, they're fun stories.
What qualities should buyers look for when choosing a lender?
The biggest thing for me, if I'm out there looking for any type of service, how quickly are they getting back to you? And how are they getting back to you? Are they being short? Are they giving you full answers? Are they happy to be helping you? The big thing, if they're going to take 2 or 3 days to get back to you, like that can be make or break when it comes to whether or not you get the home, because you might need an updated pre-approval letter. So for me, that's the biggest thing is how responsive are they? What kind of products do they offer? Interest rates, you might be 1/8% off from bank to bank, maybe 1/4%, but in the grand scheme of things, if you're going to get maybe 1/4% better interest rate for subpar service, is it worth it?
Mainly with like grants, I would say, because I work with a lot of first-time home buyers.
Right.
And like you said, things are so expensive. They cannot save up too much money, or like whatever they have, they're thinking about, like putting it into the home or something like that.
Right.
So sometimes they will go to their bank and they're like, oh, they said that I don't qualify for it. I'm like, no, you do.
Right. And maybe they don't offer it.
Yeah.
So I would say that's the other thing is like, we don't offer all the grants, but we have a lot of grants. Mm-hmm. And maybe you're looking for a specific grant. Maybe that's the reason you go with a different bank.
And then another thing I want to share, responsiveness is so important.
Yes.
I have a friend that she texted me this house and she's like, oh, I'm really interested in this home. But I'm going to go, she texted it to me like on a Friday afternoon. She's like, I'm going to go on Monday. I said, no, let's go with Megan. And so I sent her your number and I was like, she's so responsive.
Oh,
if
good.
you fill out the application right now, you text her, like she'll respond. And Megan, you didn't fail me.
Oh, good. I was going to say this. I hope I didn't miss it.
She's like, whoa, you're right. She did.
Yeah.
And the next day they were pre-approved.
Yeah.
And they were in a home like really quickly too, because a lot of closings are 45 days. And they got in their home 30 days.
Yes. Yeah, I was going to say,
days.
It should be probably closer to 30 if it's a conventional loan, unless something crazy happens.
Yeah, so I would say responsiveness is really important.
Yeah, exactly. Just having a multitude of products, knowing what's out there, what's available, and just being available when everyone needs it.
And then the other day, me and you were talking, because I work with a lot of buyers that speak Spanish. Mm-hmm. And I know there's... a lot of different languages, and
in this area, there's a lot.
Yeah.
Yes.
And we were talking about something that U.S. Bank offers that you can help us with.
Yeah.
Right?
Yep. So I've come across just in the past, let's say 6 months, French, Tigrinya, Spanish. So that's just 3, right? So we have at US Bank a service for translating any language you can think of, even if you haven't heard of it. Like I had never heard of Tigrinya before US Bank.
Yeah, so where's Tigrinya from?
I think Ethiopia.
Oh,
yes.
Yeah. Oh, yeah.
Yeah, so we have a lot of availability and it's no charge to the customer. We get this interpreter on the line. I've sat through applications, closings, anything in between. We've used these services for.
And I think that's really important because we're talking about big money,
Absolutely.
Big transaction.
Can you imagine signing a mortgage, let's say in China, and you have no clue what you're looking at? Like how scary would that be? Like I want to cry for someone that would do that. So I wouldn't ever feel comfortable unless they knew exactly what was going on.
I picked up a bottle. I think it was like green tea or something like that. But I couldn't read it. I couldn't read like the nutrition facts. So I had no clue like how much sugar it had.
I know. I mean, and that's just tea and we get nervous about it. So I can't imagine if it's like a house and a house loan and like a big chunk of your paycheck going towards it. Like you want to make sure you're comfortable. So that's I think it's huge and wonderful that it's offered.
Yes, definitely. That's a big game changer because it can be a little nervous, to like talk or simply wanting to ask questions.
Absolutely.
Because like you were telling us earlier today, that a lot of that comes from not understanding.
Right.
So, like what if you speak a different language than the person that wants to help you? And it's like, well, how can I ask this question?
Right.
Or like many times, they can defend themselves. Like in English, they know how to speak some of it,
right?
But not the full context of everything. So having a program like that,
it's pretty great.
Yeah. Well, thank you so much for that, because that's amazing. Like being able to help in every language.
Exactly. And that shouldn't ever be a reason not to buy a house because you don't know how to ask.
Okay. And then another thing I'm very interested to know is how has the current economic climate impacted the mortgage industry?
Okay, so no big secret. Rates have come up quite a bit from where they were. Historically speaking, though, I mean, they're still pretty darn good. Like 6s, 7s. Like when I bought my first home, it was a USDA. Granted, it was a $70,000 house back in the early 2000s, but that rate was 7.25. Like that's exactly where we're at now. And I didn't even bat an eye. It was normal. So clearly rates are higher. But then also the other thing too to keep in mind is property taxes have gone up for everybody in Northwest Iowa, and across the nation, insurance has gone up as well. So my big thing with this, I haven't really seen a huge slowdown. It's slowed down, but again, we were talking about being not nervous and comfortable. What I would tell everybody is don't let the interest rates prevent you from buying a home. All you need to do is like when you go and you buy a car, your first question is, what's my payment going to be, right? And do you feel comfortable with that payment or do you not feel comfortable with that payment? And if you're not, okay, well, let's lower down what kind of vehicle you're looking at. Same thing with a home. You need to find a payment that's going to fit within your budget. And at the end of the day, you can always refinance because what's happening is everyone's waiting for the rates to come down. Well, by the time the rates come down, everyone's going to be back out in the market looking for houses. Exactly. Though that house is now going to be much more expensive, where if you just buy that house now, you get the better price. You can always refinance and get that same rate that other person was waiting for who's now overpaying for their home. So it's a win-win. Just buy the home now. Make sure that monthly payment is something you're comfortable with. And then the other thing I would say when you're looking at that monthly payment, I don't want to throw anybody under the bus, but sometimes I look at competitors' loan estimates and they have on there like the insurance is going to be $60 a month. I'm like, that's not accurate. There's no way your house payment or your insurance is going to be $60 a month. So make sure you're getting an accurate or at least a very good estimate of what your monthly payment's actually going to be based upon this market. Because if you're expecting your house payment to be $1,000 but they're using way off numbers for taxes and insurance and too low of an interest rate just to kind of look competitive, by the time you actually close, you want to know what your payment's going to be up front instead of having that surprise, oh, it's actually like $1,200 to $1,300. So just make sure you're getting the right numbers.
It's always better to be surprised at the end, like, oh, the payment's actually less.
Exactly. It's better to be surprised that way than like surprised like, oh, that's my payment. That's a lot more
we talked about.
Exactly.
Oh, I once had something like, because there are some areas that require flood insurance.
Yeah.
And that's
I'm working
separate,
on one right
right?
now. Yes.
It's separate from like the...
And that's not cheap, so...
Yeah. So it's like always good to check the areas.
Exactly.
And
that's where you come in.
Yeah.
A good realtor comes in like, hey, just so you know, you're going to have a little bit extra monthly because there's going to be flood insurance on here.
Yeah, learning all about that, learning every day.
Yeah.
And, like, the first home doesn't, or, like any like second home or whatever, it doesn't necessarily have to be like your dream home.
No.
There are homes that are stepping stones to getting to that house. So like we're talking about right now, just getting into the house. Don't let rates scare you at all. I have seen that too because I mean, this isn't the first time, I once saw like a report that they got to like 14%.
I know. Can you imagine how awful it would be? Like what people would be thinking? Don't let that ever determine. Like if you need a home, buy a home. Like don't settle for renting because rates are higher because your rent's going to go up anyways because their rates are going to be going up.
Mm-hmm. Insurance,
so if you're ready to buy,
just take the leap.
Or at least ask. At least look at what it looks like.
Yeah. Even if you want to get into a bigger home.
Absolutely.
And then what is one key factor that you'd like our listeners to remember?
I just want to say everyone has a stigma that you need to fit into this neat little package. You need to have 20% down and an 800 credit score, and you need to have all the reserves. You need to be at your job for 10 years and be salary. That's not even close to being true. My big takeaway is there's probably a solution for everybody. And if it's not right now, it could be, how do we get you there? So if you have a low down payment, or you think maybe your credit's not the best, you'd be surprised. Just sit down and talk with somebody, because so cheesy, but everybody is their own little puzzle. So how do we piece it together to find your approval? And you might be surprised with what we come up with for you. You might be more ready than you think you are.
That is so true. I've had some buyers that get a check at closing.
Yeah. Oh, yeah. That's the best, right? Like, oh, here's your earnest money back. Yeah. I mean, so it just makes me sad when there's some places that only like certain type of loans. Don't let that scare you. Just because you didn't get approved at this bank, try one more and just see what happens, because they might just have more options available to make it a fit.
Because I have seen FHA, VA loans can be a little scary, but
no, as long as you have someone who knows what's going on, you're fine.
Yeah, just finding out the right information.
Exactly.
Well, thank you so much for being here with us. How can people find you?
I have a website. If you just Google Megan Van Wettering, which is a mouthful, but it's VanWettering, which was also really fast. But just look Megan Van Wettering up, U.S. Bank. I've got an app. I got a link that you can click on to apply, or my direct number. I'm fine sharing it. That's on there as well too.
I think that's how I actually found you on Facebook.
Was it?
Yeah.
Nice. Yeah. Yeah. I'm on Facebook too.
Mm-hmm. Mortgages with Megan.
Yeah.
So go ahead over there, and your link is on there too, right?
I do have a few videos out there too that kind of go into and explain like FHA, VA, credit scores, all that too, if you want a little more info on all of those as well.
So if you have any questions, you know to reach out to Megan. And if you have any questions for me, my number is 712-301-1997. Thank you for watching.